Arrowhead holds a diverse portfolio of properties in secondary locations throughout South Africa.
Yeah, the term secondary there refers to places that you perhaps wouldn't necessarily go without an armed guard after night time, but I'm being slightly disparaging. Traditionally, the management team under Gerald Leisner here was always looking after the tail end portfolio. Where Arrowhead comes from is from the spin out of the apex high bottom end of the portfolio that became Redefine. But since then, recently, they've also been doing this big thing into the residential property arena.
Market cap, 7.6 billion rand, yield of 6.8%. Of course, then Redefine the whole story with Mark Wayner. He would have had a heavy hand in this in the initial phases.
Yeah, and the splitting, I think, was by mutual consent that it made more sense to have the sort of higher yield, potentially B-grade properties in a vehicle of its own.
Weigh in on Arrowhead, Gary.
Yeah, Arrowhead. I think you know, since they're listing, I mean, they've acquired aggressively, very aggressively, and you've seen that portfolio expand dramatically. And while you like you say, it was very C grade sort of bottom end property. I mean, I think their split is now about 50% A grade. So they've really turned the direction of the company around. Like you said, their target was to I think acquire between 500 and 600 million in residential property. They got about 500. They say they've still got another 500 in the pipeline. So they're moving into residential. And then, yeah, at the same time, they bought out Vividend as well. So there has been some consolidation that was yield enhancing. My only real gripe with this company is that there's too much focus on growing that portfolio larger rather than looking at their occupancy rate and really trying to manage that. I mean, you read through all their reports, it's absolutely focused on growing that market cap. I'm just worried they're going to do it at the expense of vacancies and the solid management of the assets within the property.
Looking at the share price, again, just mirroring what we're seeing in the sector as a whole, Paul.
Yeah, I wouldn't worry too much about their becoming too wild and reckless. You know, Gerald Leisner is an old fellow.
He's got a nice... wild and reckless.
Gerald Leisner's got a lovely, big, old grey beard. And then his assistant, Mark Kaplan, the COO, is, you know, in that 35 to 40 age group that's still got lots of energy. Imran Suleiman, this FD is a experienced hand. He was at Java Capital before. But look, they were the first to move into the residential area, paying like 400 million for 1,000 unit inner city combo. They bought another a bunch of properties that had retail, residential out in the sort of Windsor area, you know, where Rand Park Golf Club is. So they've really stepped up, paid big prices, but it's almost like, well, at least you're delivering something every 3 months. And the market likes a story where there's some indication of management aggressiveness and they're not too worried currently about the yield. So you've got to give it to them. They certainly...
You're concerned about the aggressiveness here.
That just makes me even more concerned, because if you look at...
You definitely don't like wild and reckless.
Not in the property sector. This is meant to be your safe banking sector that you know, it adds the stability to your portfolio. Now, you look at every single other CEO, they're discussing how difficult the market is to find deals. One of the reasons they're all raising equity capital, one of the reasons you've seen all these property listings is because they're trying to, you know, raise equity capital so they can pay down their debt, so that when the market corrects and comes off a little bit, and the deals on the specific assets come available again, they can, you know, quickly use the debt facilities to go and buy. It's something that you talk to most of the CEOs. They're very concerned about the property pricing, and we're going to talk about it in Accelerate in a second. But I'm just struggling to see where they're finding all these great deals when everyone else seems to be looking at the market and going, yo, to be acquisitive now looks dangerous.
Paul, can you convince Gary on the Arrowhead story?
I don't know. I mean, if I was running a credit fund, which I'm not, in other words, like a bond fund, I wouldn't be so excited buying RSA government treasuries at this time when they're busy falling around trying to put more money into Eskom and selling all the family silver. I certainly wouldn't buy any parastatal debt issuances. You know, maybe I'm naive and I don't know what I'm talking about, but I would be quite attracted by this kind of asset class, and I'd put together a portfolio of maybe the growth points at the one end, buy a few of these. So I think the demand for the units is going to be strong, and they're underpinned by physical properties which are in short supply. So I don't know. I don't think the outlook for interest rates is my concern, and if there's a team like this that's prepared to go on hitting it, I'm happy to.
You're convinced, hot or not?
I'm going to go. I'm a little bit too cautious. I'm not going to go hot on this.
You didn't manage to swing it here. Hot or not, Paul Turan?
No, I like the Arrowhead team, so I'm going hot on this one.